You're sitting at the kitchen table in late March with a shoebox of receipts, a lukewarm coffee, and a brave little voice that says, "How hard can this be?" Somewhere across town, a tax advisor is sharpening a pencil like a surgeon prepping for a heart transplant. Tonight's question isn't which one of you is right, it's whether you should be the surgeon, or if that's a terrible idea for this particular patient. By the end of this, you'll know when doing your own return is smart, when hiring help is a bargain dressed as a bill, how to work with an advisor without losing control, and what a good hybrid looks like when you want both savings and sanity. Start with the real cost of free. Doing it yourself looks cheap, but your time isn't. Picture two clocks. Clock 1 is the hours you'll spend gathering documents, learning rules, second-guessing forms, and arguing with software. Clock 2 is the hours you could spend doing literally anything else that moves your life forward. Billing clients, finishing a project, seeing your family, not doom-scrolling tax forums at midnight. If your tax life is simple, one job, one W-2, standard deduction, maybe a savings account and a charity receipt, software is perfectly fine. You'll be done before the coffee cools. But the moment your return starts telling a story, side business, rental, RSUs, or options, K1s, crypto trades, foreign accounts, moving between states or countries, the hours multiply and so does the cost of being wrong. Complexity is the tipping point. Taxes aren't one big rule. They're a switchboard. Each new lever you add, self-employment, equity comp, multi-state moves, non-resident issues, rentals, trusts, a new LLC, lights another panel. People get in trouble not because they're careless, but because they don't know which switches exist. You can't claim a credit you've never heard of. You can't defend a position you didn't realize needed defending. And you don't get to say, "My software didn't warn me." The signature at the end is yours. So when does DIY shine? When your facts are straight lines. One employer. No significant investment sales outside a brokerage 1099. No side hustle or the side hustle is tiny and cash-free. No moves across state lines. No K1s from partnerships or S-Corp. No foreign accounts or crypto that looks like spaghetti. No rental or home office. In that world, DIY is like assembling a bookshelf. Follow the pictures, don't overthink the screws, enjoy the afternoon. Now step into the apartment next door where the bookshelf has secret compartments. You change states mid-year, and both states want to tax the same income until you allocate it properly. You got RSUs that vested, ESPP shares you sold, and a 1099B with adjustments that look like Morse code. You freelanced for 3 clients in 3 states, and you're not sure who gets a slice of your profit. You bought a rental, replaced the roof, and aren't sure what's a repair versus an improvement. You sold crypto at a gain, farmed a token at 2 a.m., bridged to another chain, and wrapped something because a thread said so. You own part of an S-Corp, and 2 K1s arrived on April 10th with numbers that don't match the distributions you received. You lived abroad half the year and heard magical things about exclusions and credits and certificates of coverage that apparently stop you from paying social contributions twice. None of this is impossible. It's just not a bookshelf anymore. This is where a tax advisor stops being a luxury and becomes insurance with a bonus feature. Insurance because a professional's job is to know the traps and steer you around them before you trip. Bonus because the best advisors don't just file, they plan. They see opportunities you won't because they live inside patterns. The timing of a stock sale to keep you in a lower bracket, the decision to use foreign tax credits instead of exclusions so you don't waste carry forwards, the choice to elect out of bonus depreciation this year because next year's income will be higher, the way to structure contractor payments so you don't create a taxable permanent establishment in the wrong country, the gentle push to contribute to a plan or an HSA in a way that lowers your quarterly estimates right now, not just your nostalgia next April. But advisors are expensive, sometimes. Often they're cheaper than your mistake. A missed state part year allocation can cost more than the fee. So can ignoring basis adjustments on RSUs. Confusing ESPP ordinary income with capital gains. Claiming a home office deduction with the wrong method. Forgetting to file an information return for foreign accounts. Missing a crypto income event and then learning what penalties look like. Or treating a contractor like an employee without the payroll to match. Think of a tax advisor like a good locksmith. You pay them once and sleep better for a long time. How do you know if you need one this year? Imagine you had to explain your return to a skeptical friend in 2 minutes. If the story includes more than 2 of the following: self-employment with real revenue, equity compensation, rentals, partnership K1s, multi-state or multi-country life, foreign assets or accounts, sizable crypto activity, big charitable gifts in stock, a new corporation or LLC election, or selling a business, raise your hand for help. If you experienced a life year, marriage, divorce, child, inheritance, moving countries, selling a house, starting a company, that's a consult at minimum. If you got a notice last year or amended something and still feel a little cursed, hire calm, not courage. Let's say you're leaning toward hiring. How do you choose someone good? Start with letters, but don't stop there. CPAS, EAS, and tax attorneys are all qualified in different lanes. What matters is whether they swim in your lane. Ask what percentage of their work looks like your situation. Ask how many returns like yours they sign each season. Listen for verbs: plan, model, document, defend. Ask about turnaround time and how they handle extensions. Ask who will actually work on your return, the partner you met or the junior you haven't, and how review works. Ask how they price: hourly, fixed fee, value-based, what's included, state returns, estimated tax vouchers, basic IRS response letters, and what costs extra: amendments, audit defense, bookkeeping cleanup. Ask whether their engagement letter includes representation if a notice comes, and ask how they secure your data. If the answer involves email attachments and prayers, keep walking. A quick caution about red flags, because tax season attracts magicians. If someone guarantees a refund before seeing your documents, you're not in a tax office, you're in a carnival. If they suggest creative structures that turn salary into loans or ask you to sign something you can't explain in plain language, that's not planning. That's drama. If their entire value proposition is "we know a trick the government hasn't seen," you just met a storm in search of a roof. Working with an advisor isn't surrender, it's collaboration. You're the source of truth. They're the translator. The best relationships share the load. You keep clean records, deliver them in a single burst, and answer questions quickly. They ask good questions early, send a clear organizer, and tell you which documents matter most this year. You decide together where you're being conservative versus aggressive, and document why. You read the draft and ask "teach me" questions until you understand the big levers and the story your return tells. You leave the meeting with a list of 3 things you'll do this year, so next year is easier and cheaper. If your heart still wants DIY, consider a hybrid. Book a 1-hour advisory session before you file. Bring your draft, your questions, and your fear. A skilled pro can spot the 2 or 3 places your math or method is about to go sideways and fix them while you drive, or flip it. Do the organizer and the document gathering yourself like a champ, then let them prepare and sign. The fee drops when your prep is clean. The peace rises because you're not the last line of defense. What about the software question? Modern tools are excellent at reading forms and adding numbers. They are less excellent at noticing that your facts live in 2 tax systems with a treaty in between, or that your RSU 1099B needs basis adjustments because the employer already put part of the gain in your W-2, or that your move from one state to another requires separate schedules and a proration that isn't obvious from the wizard. Software is a calculator with a friendly face. An advisor is a pattern detector. Use the tool you need for the puzzle you have. There's also the small matter of audits and letters. You can do everything right and still get a notice because a brokerage sent a corrected 1099, or a state believed a third-party report before believing you, or a box got fat-fingered in an office you'll never see. If you filed yourself, you're the front desk. You'll read the letter, decode the code, and respond with documentation. You can do it, but it will eat your Sunday. If an advisor prepared and signed, you forward the letter and say "help," and in a well-run practice that's included, at least for basic notices. This isn't about fear, it's about roles. Decide which role you want in your life. Let's talk money plainly. Fees vary by region and complexity, but there are patterns. A straightforward individual return with one state and no schedules might be a few $100s. Add a Schedule C business with real revenue, depreciation, and home office, and you're in the low 4 figures. Layer multi-state, K-1s, rentals, or expat issues, and the number rises. That can sting until you price your time, your risk, the planning value, and the probability that a pro will find legal savings you didn't know existed. If the fee buys you better sleep and a plan that saves multiples of the fee over a few years, it isn't an expense, it's a lever. What if you truly cannot afford help this year? Then make DIY boring. Build a neat folder tree for the year: income, expenses, investments, state, business, foreign, crypto, and drop documents in as they arrive. Use a checklist that matches your life. Don't guess at anything that involves basis, sourcing, or credits. Look up the rule from a primary source or an official publication and screenshot it into your file. If you're self-employed, separate your business bank account, track mileage the day you drive it, and use the standard method unless you know why the actual expense method is better for you. Set calendar reminders for quarterly estimates. If you hold crypto, export wallet histories now, not in April. And if you move between states, write a 4-sentence timeline. Where you lived, where you worked, when you moved, and what income belongs to which period. Your future self will cry happy tears. There's a bigger question hiding under all these tactics. What kind of financial life do you want? If you like puzzles and want to understand the levers in your own machine, DIY plus a strategic check-in might be perfect. If you want to offload cognitive load so you can build, sell, write, teach, or travel, bring in an advisor and turn them into your annual ritual. Either way, treat taxes as a year-round conversation, not a seasonal emergency. The dollars are in the decisions you make during the year: how you time a sale, which account you save into, how you structure a contract, where the board actually meets, not in the frantic data entry at the end. Here's a final scene to keep in your pocket. Two people with the same income walk into April. Person 1 did it alone, guessed on a couple of boxes, left 2 credits on the table, and promised to fix it next year. Person 2 hired help, paid a fee that felt annoying, learned that moving one sale across the tax year line saved thousands, re-aimed quarterly estimates, and set up a retirement plan that will quietly trim taxes for a decade. In December, one of them is still improvising. The other is sipping something excellent because next April already knows what it's doing.